Good afternoon. Welcome to the Department of Consumer Affairs webinar for motor vehicle dealers. My name is Adam Burr, and I'm one of the attorneys here at the department. I protect consumers by ensuring that businesses follow the law. Now, occasionally I assist with processing some of the filings that auto dealers submit. And today we will talk about those filing requirements, as well as some other matters that might be of interest to dealers. Please note that renewal season is now in full swing as it runs from November 1st through January 31st. If you have any questions during this webinar, please feel free to type them into the questions feature, and we'll have a designated time for questions and answers near the end of the presentation. Let's go ahead and get started. First, we have a legal disclaimer. This presentation is not meant to serve as a substitute for reading the various laws discussed, seeking legal counsel, or otherwise requesting department guidance and/or interpretations on the laws it administers and enforces. The presentation merely serves as an introduction and an overview. So today we're going to talk about a brief intro of the department. Then we'll talk about closing fees. Then we'll talk about the maximum rate schedule. Then we'll talk about the consumer credit grantor notification. Then we'll talk about some miscellaneous matters affecting dealers. And finally, we'll go over some of the free resources available on our website. So we are the South Carolina Department of Consumer Affairs. Our mission is to protect consumers from marketplace inequities through advocacy, mediation, enforcement, and education. Now, while all of you are representatives of businesses, you're also consumers because you purchase consumer goods and services in the marketplace every day. Now, we have many ways in which we can help you. You can file a complaint, you can report a scam, you can report identity theft, you can background a business, you can request a free presentation, and lastly, we can answer your questions. So here's our website, and there are a lot of things that you can do on our website. You can file a complaint, get a license, background a business, report identity theft, report a scam, and request a presentation. And if you click the About Us menu, you can find out about the many things that we do here at the department. Now, I wanted to show you about searching complaints on our website. By searching complaints, you're able to background a business. You can see how many complaints the business has. You can see the dates of the complaints. You can see summaries of the complaints. And you can see how the complaints were closed according to the department's guidelines. So here is a screenshot of our complaints database for a business that I picked. Now you might notice that this particular business seems to have a lot of complaints. However, the quantity of complaints is not necessarily the most important thing to consider when evaluating a business. It is more important to evaluate the type of complaints and how the complaints are resolved. And you can see that this company has mostly satisfactory resolutions. So now we come to the first of our three filings, the Notice of Motor Vehicle Closing Fees. Prior to charging a closing fee, a motor vehicle dealer must provide written notice to the department of the maximum amount of a closing fee that the dealer intends to charge. Now, the closing fee statute was substantially changed this year, so we'll make sure that we cover those changes. First, what is a closing fee? A closing fee is a fee for recovery of actual costs by an automotive dealership for all administrative and financial work needed to transfer and deliver the vehicle to the consumer. Now, closing fees are not intended to cover your selling costs and expenses, or even all your costs and expenses associated with operating your dealership. Closing fees are intended to cover the costs and expenses of transferring and delivering the vehicle from the dealership to the consumer. Now, these include, but are not limited to, compliance with all state, federal, and lender requirements, the preparation and retrieval of documents, the protection of the private personal information of the consumer, records retention, and storage costs. So who is required to file a closing fee? All motor vehicle dealers who want to charge a closing fee on a motor vehicle sales or lease contract. This fee must be filed with and permitted by the department prior to charging that closing fee. And the department does have the authority to review proposed closing fees for reasonableness. So are you required to file a renewal application for a closing fee? That depends on when you filed your last closing fee application. The closing fee statute changed on May 16th of 2023. Consequently, if you filed an application before May 16th of 2023, then you must submit a renewal application on or before January 31st, 2024. Now, after you file your renewal application, you will not need to file a renewal application again until you want to change your closing fee amount. Now, if you filed an application on or after May 16th of 2023, then you do not need to file a renewal application until you want to change your closing fee amount. So what goes into the department's review of a proposed closing fee? Well, that depends on the amount of the closing fee that the dealership intends to charge. If the amount is $225 or less, then it is automatically considered to be reasonable, and the closing fee will not be subject to any further review by the department. The dealer must submit only the notice of the closing fee form and pay the $25 registration fee. Now, if the amount of the closing fee will be greater than $225, then the closing fee may be reviewed by the department to determine reasonableness. The dealer must submit a notice of closing fee form and the accompanying addendum, and the department will make a determination of reasonableness based upon all the information provided. The dealer must submit an itemization of the calculation of the closing fee. And lastly, the costs must be calculated using generally accepted cost accounting principles for the preceding 12 months. So what types of costs and expenses may be included in a closing fee? All actual costs and expenses, including but not limited to employee compensation, information processing, facilities costs, supplies and materials for closing motor vehicle sale or lease transactions, including any associated loan or lease and transferring the title of the motor vehicle to the consumer, delivering the motor vehicle to the consumer, compliance with all state, federal, and lender requirements, the preparation and retrieval of documents, and the protection of consumers' private personal information. So which documents must be filed for the closing fees notification? If the amount of the closing fee is $225 or less, just file the notice of the closing fee form. Now, if the amount of the closing fee is over $225, then file the notice of the closing fee form, the addendum, and the supporting documents. Now, some examples of supporting documents include reports from accounting firms, data tables, tracking sheets, financial statements, and staffing and payroll reports. So now that you've filed, what happens next? You may not charge the closing fee until the department processes the forms and issues the dealership a certificate. The department must notify the dealer of its intention to review the proposed closing fee within 15 days of receiving a complete proposed closing fee notice. And the department must either permit or deny a proposed closing fee within 30 days of receiving the complete proposed closing fee notice. The certificate must be displayed in a conspicuous location at the dealership, and it must be included on the motor vehicle sales contract. Dealerships may file for $225 and charge that amount of a closing fee until the department completes its review of the higher closing fee amount. And if the dealership has filed before, then the dealer may charge a closing fee that does not exceed the amount on file and permitted by the department. And this would be during the pendency of the review and the pendency of any action before the South Carolina Administrative Law Court. Now, I cannot stress this enough. Our time clock starts to run when we have a complete application. So our clock does not run until that application is complete. A complete application means the closing fee form application, the addendum, the supporting documents, and the filing fee. So we need all of that, and then it's deemed a complete application, and then our time frame for review starts to run. So what if a dealership no longer wants to charge a closing fee? Send the department a letter on company letterhead indicating that the dealership is no longer charging a closing fee. If the dealership later wants to resume charging a closing fee, then it will need to submit a new application. Now, are dealers required to disclose their closing fees? Yes, the closing fee must be disclosed on the sales or lease contract, displayed in a conspicuous location in the dealership, and clearly and conspicuously disclosed in any advertisement of a specific motor vehicle for sale or lease. All right, so here are some statistics about the closing fee renewals from 2022. The department received timely filed closing fee applications for nearly 700 locations between November 1st, 2021 and January 31st, 2022. 215 of these applications were for closing fees greater than $225. 36% of renewals were processed during the last 2 weeks of January. 84 of those filed for closing fee amounts exceeding $225. And the department processed all timely filed renewals in an average of 10 days. Over 80% were processed in 10 days or less, and almost 90% were processed in less than 30 days. Now, I know this statistic is a little bit outdated. However, the trend has been that businesses typically wait until the last 2 weeks of the filing year to submit their documents. You do not want to be that business. You want to submit your closing fee application early in the process, because the earlier that you submit it, the earlier we can process it. And then once it gets processed, you can start charging that closing fee. So with that, here are some helpful tips for filing a closing fee application. Again, please file as soon as possible after November 1st. Again, the earlier you file, the quicker we can process. Again, you do not want to wait until mid-January to file, especially if you are filing for more than $225. Make sure that you file a complete application, which includes the filing fee, the closing fee addendum, and the supporting documents. The application is also not complete and will not be processed until we receive the filing fee. You want to respond to requests for information and/or documentation as quickly as you can. Oftentimes, we are waiting on the dealer to provide information or documentation, and sometimes we have to call or email multiple times in order to get a response. So if you get something from us, please respond in a quick and timely manner. Now, we do get questions about posting. The closing fee should be displayed conspicuously. Customers should not believe that they've negotiated a price and then be surprised when they go to the F&I office and see that the closing fee is added on, because that's the only place that the certificate is posted. Here are some suggestions to ensure that your closing fee certificate is displayed conspicuously. You can post a closing fee certificate at each sales desk where negotiations occur to make sure that the customer sees it during the negotiation process. You can post the closing fee certificate at the front desk where consumers enter the dealership. You can post an oversized display of the closing fee certificate in the lobby where consumers cannot miss it. So now we'll talk about the second of these three filings, the maximum rate schedule. Any creditor charging a finance charge exceeding 18% APR must file an annual maximum rate schedule with the department and pay an annual filing fee of $40 per business location. Now, some of the common mistakes that we see in filing maximum rate schedules are not understanding the difference between a credit sale and a loan, which results in the wrong form being filed, not understanding the difference between variable and fixed APRs, and not understanding the various categories of transactions, specifically secured versus unsecured. So we'll go over all of these in the next few slides. First, when is a maximum rate schedule necessary? It is necessary whenever the consumer is being charged more than 18% APR. Now, this can happen in a variety of circumstances. You could need one if financing is offered at your business, such as the buy here, pay here model. And you can need one if all of the paperwork related to the sale is completed in your office at the time the sale takes place, and the contract is later assigned to another business. This is often known as indirect financing. You could also need a maximum rate schedule when the sale is offered on credit, but the credit price differs from the cash price because of a finance charge. So let's say I buy a car for $5,000. I make 10 $500 payments. That would be purchasing the car on credit, but the credit price is equal to the cash price. Now let's say I purchased that same car for $5,000. Instead of making 10 $500 payments, I'm going to make 12 $500 payments. The total cost of the car is $6,000. And the $1,000 difference is a finance charge. So here the sale price is offered on credit, but the credit price is different from the cash price because of a finance charge. Now, the two most common business models that we see with dealers are the buy here, pay here model and the indirect financing model. Okay, if you are engaged in a buy here, pay here model and you charge over 18%, you must file a maximum rate schedule at the highest rate that any of your customers could pay. If you engage in the indirect financing model, then if any of your customers will pay a finance charge of over 18%, then you must file a maximum rate schedule at the highest rate that the highest lender is offering. So here's an example of when a maximum rate schedule is needed. Let's say that the consumer purchases a car for $5,000. The consumer will make 24 monthly installments of $250. In this scenario, the finance charge would be $1,000. When converted to an APR, the result is 18.16%. As 18.16% exceeds 18%, a maximum rate schedule is needed. Without filing a maximum rate schedule of at least 18.16%, the most that the dealer could charge would be 18%. So what are the types of maximum rate filings? They are credit sale and consumer loan. A credit sale occurs when a business sells an item to a borrower and allows the borrower to pay that business over a period of time. A consumer loan is when one business lends money to a borrower so that borrower can purchase an item from another business. Now, basically, if the consumer leaves your business with money, then it is a loan. If the consumer leaves your business with a product or a service, then it is a credit sale. Now, dealerships might finance the purchase of the car or the repair work to be done on a car. Either way, it would be a credit sale and not a loan. As such, dealerships should always file a maximum rate schedule for a credit sale instead of a consumer loan. Now, I cannot stress this enough. Dealers should not be filing maximum rate schedules for loans. Loans are different from credit sales and they have different rules. For example, unless you are a supervised financial organization, such as a bank or a credit union, you must have a license from the Board of Financial Institutions if you charge interest on a loan that exceeds 12% APR. That rule does not apply to credit sales. Also, a supervised lender also cannot sell goods without the Board of Financial Institutions express consent. So please do not file a maximum rate schedule for loans. Also, do not indicate on the application that you are charging over 18% when making loans. You are not making loans. You are making credit sales. When you file a maximum rate schedule for loans, or you state that you charge over 18% APR when making loans, but you do not file a maximum rate schedule for loans, then the department must reach out to you for clarification and must await your response to the request for clarification, even if the department can presume your intentions. This slows down the processing time, especially when you and all of your competitors are doing it. So please do not file a maximum rate schedule for loans. Only file a credit sale maximum rate schedule, and do not say you're charging over 18% when making loans, because you're not making loans, you're making credit sales. So now we come to the difference between a variable rate and a fixed rate. So with a variable rate, the interest rate changes with the market. The interest rate on any outstanding balance will vary as the U.S. prime rate increases or decreases. So for example, assume the variable interest rate on a credit card is the prime rate plus 12.75%. So in this instance, the margin, 12.75%, is added to whatever the prime rate is at the time to come up with the total interest rate. If the current prime rate is 5%, then the total interest rate is 17.75%. Now, with a fixed interest rate, the borrower will pay the same percentage of interest throughout the duration of the term, regardless of any changes in the market rate. Now, also, please note that you may charge one consumer 20% and another consumer 25% because one consumer might have a better credit history than the other. This would not make it a variable rate. As long as the rate does not change, it is a fixed rate. Now, as a practical matter, it is very rare for a car dealer to use a variable rate. Most of the time, car dealers will file a fixed rate. Now, if you happen to be that rare dealer that does charge a variable rate, please provide an index explanation as to how that rate is calculated. Many dealers will file for a variable rate without providing the department with an index for how the rate is calculated. And when this happens, the department must reach out to you for clarification and await your response to the request for the clarification. If we don't receive a response from you, we will remove the variable rate, but we still have to wait the time frame that we tell you to respond in. Stating that you charge a variable rate without providing an index explanation especially when you don't charge a variable rate at all. It slows down the processing time, especially when you and all of your competitors are doing it. So if you are not charging a variable rate, please do not indicate that you are charging a variable rate. So now we come to secured versus unsecured transactions. Secured transactions involve a lien on the property. The borrower puts up property as collateral that may be seized for failure to make payments. And the property used for collateral may be real estate or non-real estate, such as a motor vehicle. Now, creditors may offer lower interest rates and better terms on secured credit transactions. Now, most motor vehicle dealers use secured credit transactions when conducting motor vehicle sales. Now, with unsecured transactions, it does not involve a lien on the property. There is no collateral. If the borrower fails to pay, the lender will initiate collection attempts and/or legal action. So in other words, you cannot repossess the vehicle. With an unsecured transaction, the lender takes the borrower's word that he will repay the debt. These are sometimes referred to as signature loans, or they're used for services that will not be seized, such as dental work or funeral merchandise. If collection actions are initiated, then the borrower's credit score will be negatively impacted. Now, as a reminder, if you are planning to repossess the vehicle in the event of default, then you would file with a secured category for the maximum rate schedule. Now, you may file for both secured and unsecured and have different rates for each. So, for example, you may file a maximum rate schedule with a secured category as it relates to the actual vehicle, and an unsecured category as it relates to the repair work to be done on that vehicle. So now we come to how to correctly fill out your maximum rate schedule application. Since car dealerships will be making credit sales, we are using the credit sales application. If you are making consumer loans, it would be a completely different application that you would fill out. But again, you fill out the credit sale one. First, select one of the statutory categories. You can choose as many categories as you like. Now, a car dealership would almost never use the secured category real estate. Okay? Open-end or revolving credit sales are much like a credit card. It would be rare for a car dealership to use this category. And all other credit sales should only be used if the transaction does not fit into any other category. As most of the transactions for car dealerships will fall on either the secured credit sales non-real estate or the unsecured credit sales categories, the all other credit sales category should almost never be used by a dealership. Please do not select an improper category such as other. When you do, the department must reach out to you for clarification and await your response to the request for clarification. This slows down the processing time, especially when you and all of your competitors are doing it. Next, select the best options from the descriptions list. We have options for new and used vehicles, as well as auto parts and accessories. So these would be the most likely descriptions to use for dealerships. We do not have an option for the repair work. So if you will be financing repair work on the vehicles, you would need to select other as the description, not the category, the description. If other is chosen or the description is not in the list, then type in any additional description. Next, enter the maximum APR in the appropriate box. And lastly, If you are using a variable rate, then enter the rate cap and any index explanation. So now we come to the last of the 3 filing requirements, the consumer credit grantor notification. At the department, we call this filing the CGN, so I may refer to it by that initialism. Persons who make consumer credit sales, leases, or loans, or who engage in rent-to-own transactions, and persons who take assignment of rights against debtors arising from such transactions are required to file a notification form. So when is a CGN filing necessary? You must file a CGN if your business either engages in consumer credit sales, consumer loans, consumer leases, or consumer rental purchase agreements in South Carolina, or you have an office or place of business in South Carolina which takes assignment of and undertakes direct collection of payments from consumers, credit sales, loans, leases, or rental purchase agreements. You have an annual gross volume of business in excess of $150,000, and you use written agreements to extend consumer credit. Now, your total gross volume of business would be your total gross receipts, not just your South Carolina income and not just from credit transactions. An easy way to locate this number would be to look at your tax return. It would be the first number reported on the tax return. And if you file forms 1065, 1120, or 1120S, it is on line 1A. If you file form 1040 with a Schedule C, it is on line 1 of the Schedule C. Now, mathematically, if you sold 1 car every week in a year at $3,000 per car, your gross volume of business would be $156,000. Now, if you meet the statutory requirements, you must file the CGN and pay a filing fee of $120 per location. Now, if you extend credit on your website, or if you allow for payments to be made on your website, then your website is a separate business location and you must file a CGN for it. Okay, so here are some examples of filing scenarios. If a company offers consumer loans in South Carolina and has an annual gross volume of $200,000, but does not use written agreements to extend consumer credit, then a CGN filing is not required. Now, a common mistake that we see with filing the CGN is saying that you don't use written agreements when extending consumer credit. Quite frankly, it would be very rare for a business to not use written agreements when extending consumer credit. And keep in mind, if you are only using verbal agreements, then you are limited to 6% of interest. So again, it is very, very rare for a business to not use a written agreement when extending credit. But here are some other filing scenarios. If a company has an office in South Carolina where it takes assignment of credit sales and use written agreements, but only has an annual gross volume of business of $100,000, then a CGN filing is not required. And again, as mentioned earlier, that $150,000 is a very low threshold. As mentioned previously, if you sold 1 car per week for a year at $3,000 per car, you would meet that $150,000 threshold. Now, if a company offers consumer credit sales or consumer loans in South Carolina, has an annual gross volume of business of $300,000 and uses written agreements when extending consumer credit, then a CGN filing is required. So which CGN form should you file? If you engage solely in making consumer rental purchase agreements, which are otherwise known as rent-to-own transactions, then use the rent-to-own form. Otherwise, use the regular form. Now, a rental purchase agreement is an agreement for the use of personal property by an individual primarily for personal, family, or household purposes for an initial term of 4 months or less, whether or not there is an obligation beyond the initial period, that is automatically renewable with each payment, and it permits the consumer to become the owner of the property. Now, it is very rare for a dealer to be engaging in rent-to-own transactions. Those are typically used for items such as furniture, appliances, and consumer electronics. So now that you know about the 3 types of filings, please remember that the renewal period runs from November 1st to January 31st. Again, you only need to file for the closing fee if your last closing fee application was before May 16th of 2023. If you filed on or after May 16th of 2023, you do not need to file for a closing fee until you want to change your closing fee. Now, most businesses file in late January, so that is our high filing period. Also, keep in mind that only dealers file the closing fee. However, a variety of businesses have to file the CGN and the maximum rate schedule. So not only are you and all of your competitors filing at the same time, other businesses that are not your competitors are also filing too. The sooner you file, the sooner your application will get processed. Also, your applications can get processed faster if they do not contain any mistakes. Now let's look at some of the matters that the department is seeing that may be of particular interest to dealers. So here are some reminders of some dealer obligations. Manufacturer installed options should be disclosed on the Monroney sticker. Dealers cannot require consumers to purchase options that are not desired or requested by the consumer. Official fees should not be inflated. And any adjusted market value fees should be properly disclosed and included in the advertised price. There seems to be some confusion with deposits and down payments. The terms are not interchangeable. A deposit is money paid by the consumer to hold the car before the consumer purchases the car. A down payment is money paid by the consumer for a partial payment for the car up front, and the consumer will finance the rest. A down payment can be applied toward a deposit can be applied toward a down payment. Now, if a deal does not go through, whether a deposit is refundable depends on your agreement with the consumer. A down payment, however, is refundable if the deal does not go through. Late charges cannot be charged until the consumer is more than 10 days past the due date. They are limited to the lesser of 5% of the missed payment, or $23, unless a minimum delinquency charge is contracted for. The minimum delinquency charge cannot exceed $9.20. Late charges can only be charged once per missed payment, regardless of how long the payment remains unpaid. We are also seeing issues regarding sending a notice of a right to cure. On our website, we have a flow chart that can assist you in determining when a right to cure notification is required. We also have a chart on our website to assist you with the timing of sending a right to cure notification. Now, do not try to circumvent the right to cure process. You should not be having consumers sign paperwork at the beginning of the deal that anticipates default and you circumventing the right to cure process. Here are a couple of examples that the department has become aware of where dealers try to circumvent the right to cure process. One dealer had a consumer sign a blank right to cure notice when the car was sold and then later mail the right to cure notice when default occurred. Another dealer had a consumer sign a document stating that the dealer could automatically come repossess the car in the event of a missed payment. As a reminder, by law, consumers cannot waive their rights under the Consumer Protection Code, which includes the right to cure. Now, you may repossess a car without breaching the peace when the prospect of payment, performance, or realization of collateral is significantly impaired, such as when the consumer does not maintain insurance on the car, more than 20 days have passed after delivering the right to cure notice to the consumer or mailing it to his residence, or no right to cure notice is needed because a previous right to cure notice was already delivered to the consumer and more than 10 days have passed since the payment was due. An issue that we have been seeing with repossessions concerns the consumer's personal property inside the car. First, keep in mind that the towing company you contract with is your agent. Neither you nor your agent have a security interest in the consumer's personal items inside the car, such as a GPS, CDs, or tools. Consumers must be allowed to retrieve their personal items. Consumers should not be charged upfront fees to retrieve their personal items. Reasonable storage costs can be added on to what is due to the creditor. You may repossess a car without sending a right to cure notice if the consumer does not maintain insurance on the car. However, you need to make sure that the consumer actually does not have insurance before you repossess for this reason. The consumer might have insurance through another insurer. There could have been a mistake when the insurance company sent the notice of the insurance policy lapsing. The consumer could have had the policy reinstated after you receive notice of the lapse in insurance coverage. If the department were to receive a complaint about you repossessing for a lapse in insurance coverage, you will need to provide the department with verification that the consumer did not have insurance coverage. Now, the department has received several complaints alleging that dealers are checking consumers' credit reports without the consumer's permission. There are only a few limited circumstances when it is legal to check a consumer's credit report without his permission. If you do not meet one of the limited circumstances, then you must have the consumer's permission before checking the credit report. Your advertisements may not be false, deceptive, or misleading, and your advertisements may not misrepresent a vehicle for sale. Disclosures must be clear and conspicuous. Credit advertisements must comply with the Federal Truth in Lending Act and Regulation Z. Leasing advertisements must comply with the Federal Consumer Leasing Act and Regulation M. And on the department's website is an auto dealer's guide that can assist you with making sure that your advertisements are compliant. So what if you forget everything that I just told you regarding the filings? You can go to our website, consumer.sc.gov, hover over the menu item that says Business Resources/Laws, then click Licensing, then click Register Creditors, and here you will find valuable resources that will address the filing requirements. Here's the contact information for various staff members should you have questions during the renewal period. For general legal questions, including filing requirements, please feel free to reach out to me. For more of the nuts and bolts of how to file and what you need to submit, please feel free to reach out to Tanisha, Deborah, or Teresa. For questions pertaining to the CGN or the maximum rate schedule, you can reach out to Tanisha or Deborah. For questions pertaining to the closing fees notification, you can reach out to Teresa. Are there any questions? Again, you can use the questions feature to type them in. And while you're typing in your questions, let me take this time to tell you how to connect with us on social media, list some free resources, and tell you about some upcoming webinars. You can like us on Facebook, follow us on X, and check out our YouTube channel. We have tons of free resources on our website, and all of our publications can also be sent to you completely free of charge. For businesses, we also have some additional helpful resources on our website. For example, you can see your competitors' maximum rate schedules and closing fees. Here are some additional resources geared for the auto dealers industry on our website. You can find information about the limit law, our auto dealers guide, and right to cure charts. I'm not seeing any questions on my end. Scott, are there any that I overlooked?
I am not seeing any questions.
All right, looks like we answered them all in the presentation. So here's my contact information. If you have any additional questions later, please feel free to reach out to me. I thank you for watching this presentation, and I hope that you enjoy the rest of your day.